All right, welcome everybody. This is going to be the weekly recap for our live chat room ending on April 9th of 2021. The lesson this week is we're going to be talking about how to trade binary options with a small account. All right, but the most important thing is before we even think about trading in general, particularly when we're trading shorter time frames like the 5 minutes, which is for me and from all the studies I've done, is probably the most profitable, the shorter time frame that you're in than the longer time frame, only because shorter term moves are easier to predict longer term moves. But one of the things that I'm a big believer in is I'm not a big believer in indicators, but I am a big believer in patterns. And so the first thing that you need to have as one of your tools is you need to have some very reliable patterns. Question is, what is a reliable pattern? Well, a reliable pattern is any chart pattern, and I'm going to kind of give you some ideas on what I mean by chart patterns. But a chart pattern is going to be a pattern that is going to be not only reliable on a daily, but you should be able to use it on scale. You should be able to come down and use it on a 5 minute or a 1 minute. That same pattern should hold up. And it should also hold up in other pairs as well. So if you're trading the US yen, we like to see it in the Aussie US, Euro US, and other pairs as well. Now we know we're talking about a good reliable pattern, okay? I call them behavioral patterns. So when I first started, candlesticks didn't even exist, all right? And so what you're seeing here is just a basic bar chart. I still think this is probably the best way to spot patterns, because you don't have all the distractions. Very clear where the day opened. Now this is a daily chart of the US yen. This could be any chart. It doesn't matter. And when we were looking at patterns, 30 years ago, 35 years ago, we were looking at such things as yesterday's. Let's assume that we're into, let's go over here. Let's assume here we are waiting for today's action. What we would look at is okay, how did yesterday or the prior day, how did it open? How did it close? Because you got your open on the left, you have your close on the right. How did it open in relation to the prior bar? And or how did it open in relation to the 3 bars back? Okay. And what we did is we just tore it apart, man. What we do is every single day, we would take the last 2 bars, 3 bars, and 4 bars and just keep running it back historically. And what you notice over a period of time is you're going to find some very repeatable patterns that are highly predictable, okay? To kind of give you an example of what I'm talking about. Now, this is not a pattern that we use. We have much stronger patterns, but I'm going to give you an idea of what we mean by that. Okay, if you come back over here, let's take a look at this right here. You see this bar right over here, this bar right here, and then you have the following day. We call this an inside day because, see, this high is lower than the prior bar's high, and this low of this day is higher than the prior bar's low. So it's inside of the prior bar's day, all right? It doesn't happen very often, and that's what you want to look for. You want to find these patterns that don't happen very often. Once you see that, then what you want to do is your next strategy is to identify how to take advantage of that unusual pattern setup. Okay? Most of the time, it's going to be a scalp. Okay? In most cases, it's going to be a scalp based on the opening, but typically it's going to be a scalp once you take out that high. So let's assume here we're still waiting here. Let's go back. Click. Let me see if I can do this. So here we are. We had our inside day, and we're saying, what are we going to do tomorrow? Well, a lot of it's going to be based off how we open. But the other thing is I know that I'm probably going to want to go ahead, and if it starts to take out the high, I probably want to buy it. If it takes out the low, I'm probably going to want to sell it because the probability of it being another inside day is pretty slim. All right. So typically, the other probability is probably a very low probability it's going to be an outside day, which means tomorrow's going to take out today's high, and it's also going to take out today's low. That would be outside tomorrow, right? So then we come into the next day. And so we had our inside bar. So then the question is, what do we do? Well, we can scalp once it breaks that low. So you take out that low, we scalp it. We could go ahead and we can scalp it. That's one opportunity, okay? But once again, it's going to be this. What I'm trying to show here is I'm not trying to show you a specific pattern, all right? What I'm trying to show you is a way to go back and identify the patterns. Get all the noise out of there. You don't need candlesticks, okay? What you need to do is you need to be able to look at the last 2, 3, 4 bars, and then every day go back and run your analysis, all right? And what you're going to notice is you're going to start seeing patterns develop. You're going to see repeatable patterns. And what you're going to do is once you find that in a pair, then you're going to run it across other pairs. Run it across gold, silver, run it across commodities, run it across other forex pairs. And if it holds up, then you know you have a reliable pattern. Okay, so that's number one. You have to have a reliable pattern before you can even think about trading in general. So then what is the best way to trade a smaller account once we have a reliable pattern? We'll get into that in just a minute, but first I want to go over to the stats for this week, and then we'll get more into how to trade binary options with the smaller account. What is the best way to do that? We'll touch on that in just a minute. Okay, so here we are. Here's the results. These are, once again, this is trading just one pattern, which is the PAP. Naked, meaning that we're not trying to filter it out, basically meaning that if it sets up as a buy or sell, you blindly take that buy and sell, which we do not recommend. But the idea here is that even if you were to blindly trade it, we can still put the odds in our favor. Obviously, we can add onto those odds by using other filtration methods, but this is just out of the box, taking the pattern as it is. What is its predictability of the next day being up or down? And this is what we have, okay? And so one of the things I mentioned last week is I was going to trade just a US yen. And be honest with you, for me it was a little difficult at first because I'm so used to trading all of them. But actually I started to enjoy it because it's a lot less stressful. And you're not taking a lot of trades, but you're taking quality trades, okay? And others in the chat room that were doing this same method, and some were not just trading the yen. I mean, some of my students, I'm really proud of the fact that they don't just follow me, which is what I don't want them to do. I have some just trading the euro US. I have a gentleman that just trades the pound US. But trading one, I think is, a good way to go. So anyway, so all I traded was the US yen. These are the naked stats for the week. You can see first of all, the first trade of the day, still very nice in the morning, 80%. There's only one losing day there. And I think the Knights had two losing days in the first trade of the night. Once again, this first trade is not a strategy. It's not, I'm just going to take one trade a day and walk away. Basically, what it's showing is that just your very first trade coming right out of the gate tends to be a high probability trade as well, all right? Don't ask me why that is. It's probably more to do with the particular time we start trading more than anything else. I mean, I wouldn't want to use the first trade of the day in mid-afternoon, but certainly in the morning and certainly in the evenings is a really good time, okay? So that being the case, you can see it had good probabilities. As far as the US yen, just on the naked stats alone for this one pattern, I'm still hitting at 81%, 67, almost 70%. Keep it in mind that we're only trading, 4 days out of the week? Something like that, 5 days. Well, actually 5 days. So still very good percentages. But the question is, how did I do just trading the CB trade? So let's take a look at that. I didn't have any losing days this week. No, it's not as much as I normally make. But at the same time, I'm trading 1/4, okay, of the pairs that I normally trade, right? So still, that's a very, very, very good return on just trading one pair. And that's just using my typical ratio is 1-3. Now, keep in mind that if I end up doing a deep out of the money, I want to put more on because no sense selling something $90, risking $10 and just put one on. You want to put, several on. All right. So you want to take advantage of that based on premium. But nonetheless, this shows that it's a good idea to start off trading just one particular pair. And so that gets into what is the best way to trade binaries with a small account. Well, the best way is to trade one single pair, okay? Because you got a couple things going for you. Number one is when you're trading one single pair, it requires a lot of discipline, because you may see setups coming in the Aussie or the Euro, and it's not easy. It's not easy to be disciplined and ignore those. And trust me, I had plenty that I saw that would have been very nice trades that I had to let go because I was just sticking with the yen. So it's good for focus. It's good for discipline, which you need if you want to be a good trader. It's also good for smaller accounts because you're not having as many trades. So now you can really focus on finding really good setups, right? Taking those stronger patterns and taking advantage of those and being very disciplined. And the other thing is, when you start trading one pair, the most important thing you're going to get out of it is you're going to start to learn its personality. All right. And just like the yen on a lot of trades, when you put that first ticket in, whether you're buying or selling it, it's going to go against you. Okay. It's pretty common that it's going to go against you right out of the gate. A lot of people can't handle that because they think they're going to lose on the trade, but that's usually a good indication that the trade's going to be a winner. And we were talking about that, and I was demonstrating that this week. You know, several of the good trades we got into went against us, and then they finally fell into place, and it turned out to be a winning trade. Very common. That's been a repeatable characteristic of the US yen for a long, long time. So that's different than the pound. It's different than the Aussie and the Euro. Each one of these have their own little personality. So sticking with one is not only going to help you get more focus, you're going to see better results. You're going to understand its personality. So if you decide someday to trade two of them, hopefully you've traded each one individually and you know their personalities. Okay. It's going to allow you to start with a smaller account because you're not going to have as many trades. All right. And the other thing is, if your pattern is good, all right, it shouldn't, when you go back historically, you should not see, what you should not see is a pattern that has 2, 3, 4 losses in a row. All right. You want to find a pattern that's where it's unusual for it to have, 2 losses in a row. Preferably have a pattern that has typically 1 loss and then it goes straight into a win again. And it may have another loss, but then it goes straight into a win again. You don't want to have patterns that have losses like, it has 2, 2, 2, and then maybe you have 5, 6 winning trades, and then you get into another one that has, loss, 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 and it's very random. You don't want that. You want to see a pattern that has like win, 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 loss, win, 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 loss, win, 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 loss, win, 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 loss, win, loss. You want to see that you don't have multiple losses, okay? That's a strong pattern. And that's what I teach in core, and that's what my patterns are designed to do as well. So all that's very, very important, and it tells us a lot about the market conditions based on the performance of the pattern. So once again, getting back to the lesson, what is the best way to trade binaries with a small account? Stick with one pair. Find a pattern that works, that's repeatable across the board in different instruments, and then apply that to just one pair and do that for a good month or a couple weeks until you fully get it down and you're profitable. Then if you want to go to a second pair, you can do that. I would never go more than that. You can do plenty well on one pair. You can, as your account grows, you can go up to 2 pairs if you want a little bit more action. But once again, I've talked about this a lot, okay? And I see this over and over again. People want action and they tend to overtrade and they blow themselves out. One of the things you have to remember, and I repeat this all the time in chat, less is more. Less is more. So the less trades you have, you're going to see that you're going to be more profitable than trying to make more trades. All right? Less is more. Particularly when we're trading 5-minute binaries, we don't need a whole lot of trades in order to hit a daily objective. All right? So that's the lesson this week. I'm going to continue one more week. Who knows? Maybe I'll go longer. I'm going to trade the US yen again. It's my favorite right now, but it could be the Aussie, it could be the Euro. Eventually, we're going to be doing all of them. We're going to take a week and we're just going to focus on that one pair. But that's one of the benefits of getting into our live chat room, is because we're going to help you develop those skills, okay? Understanding how a particular pair moves, what is its personality, how to take advantage of it. You're going to see the trades that I like, the trades that I don't like. You're going to be able to correspond with other successful traders that are doing this full time, and you're going to be able to pick their brains as well. So it's a really good environment to be in if you want to be a successful trader. If you're a hobbyist, then you probably don't want to get into the live chat room. But if you're into this to make money and do it consistently, and hopefully someday maybe even make a living out of it, if that's the route you want to go, then you've got to get educated and you got to put in the time to be successful. And the best way to do that, or the quickest way to do that, is to get around other successful traders and see what they're doing, and really get to know the personality of the instrument or instruments you're trading. All right, that's it for this week. Look forward to this coming week again, as I only trade the US yen. If you have any questions, you can always go to binaryprostrategies.com. Shoot me an email. As always, please give me your thumbs up. Let me know you like my videos. Hit the notification bell so we can keep you updated on any new videos that may come out in the middle of the week that you may be interested in. And that's it. Everybody have a great trading week, and hopefully we'll talk to you next week as I do my next weekly recap. Take care.